Hey folks, and welcome to the Pipnotic Symposium for the 28th of March 2023. Today we're just going to run through the charts a little bit, have a look at a few trades that are setting up, and see how we go. I'm also going to talk a little bit about the software, just to help clarify some of the questions that I've been receiving regarding the configuration. Okay, so let's start off here with the Euro American dollar. Let's go to the weekly chart and we can have a quick, let's go to the monthly chart actually. You can see we formed this base at this area of demand that we've been speaking about for a long time, just down here. The prices went through it almost to the pip, and now we're starting to rebalance this price and efficiency here into the area. Okay, and knowing this, we have a bit of a directional bias, but some things have to happen before we can do anything. Number one is we need price to settle down. We need price to settle down before it moves down to test the base here and continue higher, or before it does something else, which could potentially be visiting this sell zone here. That was not a straight line. Before continuing lower. So these are the two potential scenarios. We don't have to know which one it's going to be. We just have to wait and let the chart tell us. So there's no guessing, which is good, because guessing is difficult. So after that, we'll have a look at the weekly chart. And having a look here, you can pretty much see where we're going to see some stalling in price. We can see we have a lovely base here on the weekly chart, which I'll just pencil out quickly. Well, this very nice area here. Okay, we have a price and efficiency. We have the buy zone already lined up, so this is a lovely area. And we also have a couple of areas above price that I think are very, very stunning. I like this one here a lot. And I like this one here because we had this area of demand that was tested several times. Finally removed. The area that removed it is this one just here. Okay, so this is a really beautiful one, but this is a weekly chart. We are months away from it, and so let's focus on what's happening closer to price. On the daily chart, we have to zoom out a little bit. We can see that we have, it wasn't a very pretty situation. Okay, so on this chart we can see very clearly that, I always say clearly, but maybe it's not so clear. But we have this area of demand, okay? And this is demand because price left, and then prices tried to get close to it. Okay, when that happens, this is essentially an arrow telling us where we have some price sensitivity, some built-up pending liquidity, which is required to drive prices higher. So we have that there, prices pierced through it. We went to the parent child, we went to the parent through the child, and prices left and moved to the opposing side of the market, so the top of the book, and then prices revisited this chart. Okay, so this is the parent. Sorry, this is the parent. This is the child. Price went through this child to this parent and formed another child, which was tested on the second approach. And now it looks as if prices are just gnawing away at this weekly supply just here. So we don't know what's going to happen, but we can just see that there are a couple of scenarios. Okay, so obviously this is all fundamentally driven. Okay, there's a lot of crazy, wacky stuff going on in the world, which is going to be the reason that one currency moves relative to another. And again, it's relative. So you could, the euro US dollar could go down either because of a weak euro or a strong dollar, or a weak euro and a strong dollar. Okay, so there are three potentials there. So you have to be a little bit mindful of the monetary policies that are driving the value of these individual currencies. Okay, but for the time being, we have reacted. So we have to focus on bleeding edge price at smaller time frame areas of supply and demand. So let's zoom in a little bit. So we poked this weekly supply. One time we went just beyond it, and then we had a very, very quick move away. So this rejected We retreated from these price levels, and now we're looking to rebalance the price inefficiencies that were formed on the departure. So we have this one here, which is rebalanced right there, and we have this one here, which is yet to rebalance. The sell zone is right there. So I'm thinking that prices could go up to here before we find out where we're going from here. Okay, we have our boxing methodology here, 50%. Where did price go to? Went right there to the 50% mark, as anticipated. And we did so at a very, very nice pattern, which was very, very clear. This is going to be visible on the hourly chart. You can't see the details of it in this one, but this one's important to us because we had a rally up to here and then a retracement. Okay, so we had another one here. So we had attempts to move prices beyond these price levels here, but they failed several times historically, and all of a sudden they succeed. And so when this happens, you have to pay attention to this. Okay, it does look messy, but if you train your eye to see these, then you'll be able to notice the details. And this is the area of demand that was formed prior to the consumption of the supply located in this area here, the one we just marked off, where prices came to just around here. Okay, so that one's gone. The area that formed it, that consumed it was just here. Okay, so prices rallied, and we managed to accumulate above the area. You can see we have black space right here, no tests. That's a good sign. That's telling us that we have strength in this move. We have high volume. So we are deep in the book for this particular move on this time frame. And the bids were able to consume the opposing offers. And so this is what this will look like, okay, on the price chart. Okay, and so now prices tested this, and then we've formed a couple of areas. You can see we have 4-hour supply and 4-hour demand just here. And so the question is, well, what do we do? And so there's no easy answer to that. You just have to get your feet dirty. So you have to put your feet in the water. And then if you look at this one, and you were to assume, or let's say that you were going to consider to buy from this area here, you would have to also consider the fact that we have opposing supply here. So did prices maybe react here? I mean, it can't go very far. There's not a lot of room. So this is why you would potentially have to pass on this as a buy and this as a short. Okay, but you could take it, but you'd have to manage the position very aggressively. This would be the entry for a short, and this would be the entry for a long. Both of them are yet to be filled. But this is what we have, okay, for this time frame. And so I wouldn't be messing around so much with this time frame. I'd be waiting for the more profound areas to be reached. And I really like this down here. Oops, wrong tool. I like this one here. Why? Supply, test, consumption of the offers from here. Price inefficiency, buy zone established beyond the 50% mark. That's a no-brainer. That's kind of a load the boat position. So down in this base here, okay, originating from just here, okay. And so I mean, for the opposing side, we do actually have a very attractive zone here, just around here. I like this one quite a lot. Software found it. Just a very nice little price nodule there. But notice as well that price has already been back to this price level. This is the price. So this is essentially distribution, and this is the departure from that area of distribution. So this is fresh supply, price inefficiency, sell zone. Price visited it, we pierced it, and then we moved away. And now we're coming back to it after visiting a daily demand. So you have to wonder if that would be such a good idea, selling up here. You could do, but you would have to maybe manage the position slightly more aggressively. Excuse me. Above price, we have this. We have a bit of a. We have this right here. This weekly supply. Sell zone established. Have prices been back? No. Okay, there's black space between here and here, so this would be a very interesting place to sell euros and buy American dollars. There's this little window of opportunity just in here. Okay, and there are actually quite a few, but they're higher. I like quite a few of them. I'm just going to put some boxes around. I like this one a lot. I like this one a lot. And I like this one. Put it up here. And this one potentially for a very short-term position. All right, so let's remove all of these and move on to another time frame. Let's move on to the pound, American dollar. Actually, let's look at gold. All right, so if we look at this, let's go to the monthly chart. Man, this is I feel okay from a fundamental perspective. I really see potential for a lot of gains in precious metals because of the very, very laissez-faire and reckless monetary policies. And so I think any pullbacks in gold or silver would be met with increasing value for these assets. And you can see here super clearly we had this really beautiful, very beautiful supply that was tested, removed. The area that removed it is this area in here, just around the 50% mark, just a little bit shy. Parent, child, price came to the child, and then prices really, really rallied. We had the buy zone established just here from all the way back in, what is that, 2019, late 2019. Okay, and prices just raced through it. We had a month below, and then the following month prices, really rallied quickly and forcefully. And so, keeping this in mind, I'm thinking that we're probably going to maybe visit these highs here, and then potentially rebalance these liquidity voids below price, and then I think we're going to start to see a lot of interest in buying gold, but also silver. Okay, yeah, okay. On this one, it's super clear. Here, the algos are selling from around here. You can see. I don't have my glasses on. It's super difficult to see this graph, but I zoom in like a 7-year-old. Okay, so we have this area here. We have this turning point. So we have value, perceived value, prices reach this. Let's have a look at the histogram. Yeah, we're seeing short signals here on this candle here. Prices went down. The opposing side of the market, buy. Wow, it works like magic, doesn't it? So we have, okay, if we just follow the histogram alone, we just focus on the cycles. We have the cycle. We're being told to sell here, told to buy. Actually being told to buy right here on that blue candle. This one here. And now, we're kind of we're told to still here, around, and then prices went down, then further up. But you can see that we're in the middle of a cycle, we're at the end of a cycle. So we had the bear cycle, completion, bull cycle, completion. And so we should ideally begin a bear cycle down to demand. And you can see some demand down here somewhere, where we've got this parent, we've got the child above it. The child is located at the 50% from this box, our boxing thingy, and then we have prices have already tested it, and we've moved above these highs. So, it's pretty clear that we're looking to see an increase in the demand for gold. And what I'd like to see is I'd like prices to move down to here, which is super clear as well. You have this just here. Okay, we have the buy zone established, and so price is coming down to the 1900, about $1,900, $1,920, I think would certainly entice some punters out of the sidelines and some institutions as well as they begin to build some long positions, keeping in mind of the fact that we are here in the cycle, bull cycle completion, and now we are at the beginning of a bear cycle. So this would lead us to believe that we might indeed see prices continue to break down until we reach demand. We have demand here. Will this cycle be complete by the time price gets down here? I don't know, but certainly by the time prices get down here or a little bit lower. All right, so the algo started to sell. We got close to the profit, but it missed it by just a tiny bit. Very close. We came down to here. So I'm thinking that prices will come up here and then we'll continue to move lower. But we'll see. We'll see what happens. Okay, let's have a look at silver. Where are we here? All right. So on the monthly chart, now I don't have a lot of data. You can see, gosh. Okay, so we had some enormous demand for silver. Look at this. Boom, boom. Where is it removed from? Right here. Gosh, prices raced down and then they really left. So we have this area of demand that has been tested and is still in play. And then we had the chart that formed just above it, which has now been tested. And so I'm thinking prices are going to continue to rally. I can't see what's going on here historically, but we've already visited here. Just here. And so it tested once, twice, 3 times. And so any following test to this area of supply would be testing an area of supply that has been significantly depleted since it was formed back here in 2012. So I think that we'll certainly see prices rally higher from here. Let's go to the weekly chart. Oh yes, so we have, oh man, this is so nice here. We look just here. I really like this. Prices did not make it. We reached this area of demand, which is the one responsible for moving all of this supply here. Okay, and this is a CFD. This is not the actual gold commodity. It's a synthetic instrument that represents the value, the underlying value of gold versus the American dollar. Sorry, silver. Okay, and so the problem with that is that you can't focus on volume information because this market is very, very highly fragmented and distributed and lays in the hands of the individual brokerages who make markets so that we can trade these assets. Okay, so volume information is not useful to us, and so in a situation like that, you have to look at the patterns that that the software brings to our attention, because this is showing us where we have the real strength. Okay, so area of demand, buy zone established, tested, boom, 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 many times. It starts to break down. Where does price go to? Demand. This is the demand. This is the buy zone for this demand. Okay, there's a relationship between these two here. Okay, the higher the buy zone above an area of demand, the more liquidity available at that area of demand. Okay, and so when you see something like this is a very clear indication that we're likely going to see a very strong reaction here. And then prices form this area of monthly demand. So this is the child, this is the parent. Zooming in, you can see here that prices had a pretty deep move into this base here. We moved not quite into this area, but maybe to the upper edge of this child. Here's the parent. So here we have parent, older sibling, slightly younger, and youngest. I hope that all parent stuff makes sense. And then we have now prices really looking to challenge these highs. We do have price inefficiencies below price, and so you can expect these to rebalance. And they have to rebalance at some stage. This one was exposed and vulnerable for quite an extensive period of time. What happened? It rebalanced. Okay, this is very, very normal and predictable kind of market microstructure behavior. So when you have a liquidity void, prices will naturally gravitate through it because there's no liquidity available there. There's nothing to hold it. Okay, so we move back, and so prices move in the direction of thinnest liquidity, which would essentially move us back into the space here. Price rallied, price inefficiency formed a child. Prices rallied, price inefficiency. We form this area of demand into this monthly supply, but we have a lot of exposure below. So I'm thinking a pullback and then a continuation higher. So just use the software to identify these on whatever time frames you're comfortable with. We've got a pretty interesting one here, pretty ugly here. Let's go to the small time frames. Well, that's kind of an ugly one, isn't it? Yeah. So yeah, just pay attention to what's going on in these big time frames because it's really important. And this stuff is applicable on absolutely anything. Let's have a look at the pound American dollar. Where is it? It's the pound. Let's go to the monthly chart. All right, so what's going on here? No. Well, we're very low. That does not mean that we can't continue to move low. It just means that it's a pretty discount price for pounds if you're holding American dollars. Have very big divergence at these lows, and so we can expect some buying to take place here. You can see that we have a price inefficiency down here. Price poked into something historical which we cannot see. We go to the weekly chart. Maybe have a bit of a gander. Yeah, I mean, I would expect prices to revisit these lows, but we do have our cycles playing nicely. Okay, so we have bear cycle, maybe beginning of a bull cycle, we don't know. But so we can expect prices to rig a little bit higher, rebalance this, and potentially bring prices back to parity. We do have as well, keep in mind, we have our premium prices, our discount prices. Price has moved back to the mean, but it's looking to move through, and so we can maybe expect prices to break higher. Let's have a look on the daily chart. Yes, we have some super nice. Okay, so we had monthly demand removed by this. There's a lot of trading in here. So above here, this is a supply, this is a child. So expect prices to maybe move deeper into this area here because the real liquidity is above this. Okay, and the reason I said is because we have supply, and then we have the sell zone right at it. Okay, so parent, child, trade the parent, not the child. And then for now on this time frame, let's have a look on the smaller. Okay, so we have some pretty interesting areas right there. I like that one. That's a nice pattern. When we see this, remember what we spoke about many times. We have chaos, we have clarity. Okay, so you want to be trading above this mess, and this is just like liquidity exploration. Prices dash out of perceived value to seek liquidity, which we found just here very, very clearly. Down, and then a huge departure from that area. We have this pattern here. This is kind of the shakeout at the end of a move like this. So ideally we want prices to come back down to the origin of the move that kind of moved through all of this mess. So that would bring us back to about the one. What is that? I can't even see what that says. Maybe 119.30ish around here. That'd be very, very nice. Okay, and here we have the buy zone established. We have uncharted territory, so prices coming back down to this area here would be very good, I think. Okay, good. Well, I'm going to leave it at that for the time being. If you have any questions, let me know, and thanks for watching.